one of the areas that we spend a lot of time in is helping people who've put together portfolios of properties. And a portfolio may be one extra home or two, or 30 or 40. And they've been real estate owners, they've had to deal with the tenants and taxes and trash and toilets and all of that over the years, and they're tired of it. A lot of them are baby boomers, they want to cash out. And they want to sell without it being a big problem. They also don't want to get killed on taxes. And that's really where the planning impact of that 1031 exchange, that's really where that comes in, because we can show them how most of the time they've got some really good solutions for that.
And his home will sell no matter what.
Sure.
But will he get the most? Will it have enough market exposure if you do for sell by owner? Whereas if it goes in the MLS, you have a lot bigger pool. And you know, there's a lot of other little things in there that people can learn from.
I know that in that case, you've gone well above and beyond just being a realtor. You know, it's almost like you've been a general contractor with a Rolodex of people that can come in, get something done efficiently. That's pretty unusual, I think. I think that is one area, it's a point of difference between you and a lot of your competition. Okay.
Absolutely. Wonderful. I love what I do.
We have a very special guest lined up for today's show. Mary Jane Ogle has developed an impressive reputation in the Denver real estate market. She has been a real estate agent for 19 years and a real estate investor for more than 30 years in the Denver area. She is known by her clients as an agent who goes above and beyond the call of duty to provide a real estate experience you cannot get anywhere else. Today we will be picking her brain to learn more about the real estate market in Denver, how to approach buying and selling a home or investment property, and have some conversation on the 1031 exchange. Stay tuned for the program dedicated to financial planning for real estate investors. You won't want to miss this episode of the 1031 Show. Hey MJ, how are you?
I'm doing well, thank you.
And what is your what's the company that you're with now?
I've been with RE/MAX Alliance for 19 years and have really enjoyed that.
It's been a great company.
It is a great company and it has really treated me well. I am going to make a move to eXp Realty, and that will be effective this week.
Oh wow! This is a timely interview then. That's great.
Yes, very timely, and I'm very excited about that, and excited about the growth potential, and also the opportunities to do things that I couldn't do at RE/MAX.
Well, the RE/MAX reputation and what they've been able to do, and the founder there, I mean, local company, has just been incredible. I mean, it's really legendary kind of in the real estate industry.
Right.
So, how has that been set up? It's you pay a desk fee?
Well, with RE/MAX, we pay a desk fee, or we can do where they get a split, and then you have a cap. It's set up that way.
Okay, so they offer some flexibility. Would you say it's really good for new people getting in?
I think RE/MAX is a great company for anyone. In the past, they would have people, you had to be in the business like 7 years, and then they would accept you. But they do some training, and I've had a couple of people come on with RE/MAX, and they've been really happy with it.
Now, you've been, as far as background, you've been a real estate investor for a long time.
Yes, for over 30 years. We've been in the area almost 40 years, and we bought our first rental in 1989. Okay. First rental in the area. We did have rentals in the last place we lived, but in '89 we bought our first rental, and then my husband handles all the rentals, and we currently have, I believe, six or seven rentals, because he does all of that. Yes.
And then you decided to. What drove you to get your real estate license? I think you said 2003?
2003, we had a rental, and we kept getting low offers on it. And we thought, we need to get in there because there's got to be something wrong. And indeed, there was something wrong. We had to go in there and just renovate the whole thing. And
oh, wow.
Yes, our agent was in Germany for a month, so I thought, okay, this is a good time, we'll renovate it. So we did that, my husband and I. We had 4 kids, and we boy. It was really a busy time, but we left the sign up thinking we want people to know we're still going to sell, but we ended up selling it to a young couple, and we negotiated price and terms, but we weren't there one day, and they called the sign So that brought in another agent, so we had the listing
boy.
agent who was not in town, and then the agent who was local, so we had to pay both of them. And we had worked so hard on this renovation,
Yeah.
and they made more than we did, and I was really upset about it, and my husband said, do something about it.
Time to get it.
And
yeah.
so the next week I signed up for a real estate school.
And as they say, the rest is history,
The
right?
rest is history.
Well, and you've got at least one of your kids is a realtor.
Yes, Michelle, she's
Yeah.
a realtor, and she's independent. She's been in the business for 16 years,
Mm-hmm.
and I've been in for just over 19 years. So we work
Very
together,
good.
but we're also separate agents.
Yeah. So now the company you're going to then, would you say that's reflective of just the trends, information technology, the virtual officing? What would you say is driving that trend?
I think the virtual office, also the ability to grow a team and not have it cost me extra money to grow
Mhm.
a team. Also be able to work with rentals
Mhm.
but I the biggest thing is to have that opportunity to grow a team, and then also as they grow, I actually get a gain from that.
Sure.
They call it revenue share, rev share.
Oh, sure.
Mhm.
Well, and like you said, even in your first sale, or that
Mhm.
first one that motivated you to get into the practice, somebody came in, they got a referral commission, right?
Mhm.
At the time, or a listing share, or whatever the technical term for it is. So
Right.
you've been in the industry itself as an owner, and
Mhm.
that's something we'll chat a little bit later. Part of what we do on the 1031 show is we really advise people on how to handle the planning impact of their property, of their real estate. Our firm is a financial planning firm, and so it's frustrating when we work with folks and they own assets, but they don't really know where they fit into the overall plan. And there should be, we like to say, whenever you buy an asset, you should have the exit in mind.
Exactly.
You should know what you're expecting out of this property. And I've seen you do that with some of the folks you work with, saying that, gee, you're buying this property, well, and gosh, when you buy a property, you look at it, you're like, oh gosh, we could do this, we could put this in here and that do there, move this wall, put in this piece. It's like, wait, stop. What are you planning
Yes.
on doing? What is the exit? Is this your forever home?
Yes.
In which case, put as much money into it as you want. Is this an investment? And then you might temper that a little bit more.
Right, and right now, the prices are going up, and
Mhm.
the equity, if you buy a home, you've already gained equity if you
Yeah.
bought in the last year. And so it's okay to put money in, but we've been here long enough, we've seen the ups and downs here in the Denver metro area a couple of times. And one of those was in the late 80s.
Mhm.
And so I'm always a little bit cautious as to how much I put into my homes
Mhm. Mhm.
or, advising my clients. But if you are planning to be there, you do it for yourself. You don't do it to make money on the home. And that's the thing. A lot of people are like, well, I want to make a lot of money in this home.
Yeah.
You buy a home to live in it,
Mhm.
and you make it your own.
Now that there's also investors, so we'll
Mhm.
talk about that a little bit as well.
Mhm.
But as far as the homeowner, that's really the two types of clients. Do you work more with individual homeowners or more with investors, or good combination?
I work mainly with homeowners, but I do have several investors, but they're very savvy,
Mhm.
and there needs to be good equity position if they're going to buy the home.
Okay.
And right now, our
That's hard to
inventory is
find.
low,
Sure.
and the buyer pool is high, so supply and demand is just such that
Mhm.
investors can't make enough money off of a home. But there are still opportunities out there. There's wholesale opportunities as well.
Well, I know we're jumping around a little bit, but that just reminds me, Zillow.
Mhm.
What a force in the industry, and they made a huge change of direction. Can you tell me a little about that? I see a lot of homes
Yes.
offered by Zillow.
Yes, so they're what is called an iBuyer, which is an instant buyer.
Okay.
And they have a pool of money that they buy homes, and they bought too many homes. And they have algorithms,
Mhm.
and they have metrics that they calculate how much they should pay for a home. Everyone knows about it.
So is that when I get unsolicited offers where it'll just
Mhm.
be an email or something in the mail saying, we'll buy your house,
Yes.
sight unseen?
Right, and so they have a certain amount that they'll pay. Zillow has always had a Zestimate, or people call it a Z estimate, but I
Mhm.
call it a Zestimate. And that's where they have an algorithm, and they're an aggregator, and they figure out this is what this is worth. Sometimes it's accurate, sometimes not.
So are they still buying homes?
They're not buying homes. They stopped the 1st of November in 2021.
Does that mean they're getting out of it, or they feel
Yes.
it's just toppy at this point?
They are getting out of it because they realized that their system couldn't figure out the forecasting of the pricing. And so some homes they paid too much because they would have realtors go out, look at the home, make a recommendation, and then they would buy it for that. Well, if the realtor doesn't know how to do comparables, they would be buying a home. In fact, one of my clients put in an offer on a Zillow home, and it had been priced, I would say, 60 or 70,000 higher.
Oh, wow.
And then we went in at their list price, and we were able to get it. But then there were too many things on inspection. But after further review of the comparables, we were paying market rate. So they paid way too much for that particular home. I'm sure that they bought some, and they were able to, make a good.
So it's a tough business, and even with their sophisticated algorithms, that they still decided they were going to stay in their lane and not be the
right. And there still are a few out there, Open Door and a few others, but now there are power buyers, and that's where a company will come like Homeward, and they will buy the home for you. The buyer moves in, they move out of their home, then that power buyer sells that home, and then they finance it. So the house they're living in has been purchased by the power buyer. And then their home sells, then they have the financing, and then they finance with that same power buyer.
So it's basically serving a bridge or a mezzanine role.
Yes, it's like a similar to a bridge loan. But
now in the 1031 exchange business, we occasionally will do a reverse 1031 exchange. Somebody sees what they want to buy, they don't have the cash for it yet, but they have to figure out some way to buy that property because they know they're going to sell and get into it. So very, very similar. What do you see the market like right now? Do you feel it cooling? Do you feel it?
Well, it's more seasonal right now. December and January are
normal
the
seasonality
cooler months. It basically is a bell curve, and summer months, because of school, that is when a lot of homes come on the market, and that's when a lot of buyers are moving. So just historically, summer months are better to sell and more inventory to buy. And so, we're sitting mid-January right now, and so it's one of the slower months. And when we bought our
How
rentals,
do inventory levels look now compared to times in the past?
It's very similar to last year, but our inventory is so low. I mean, there are people just scrambling just to get a home, and they'll do whatever it takes to get it. And sometimes it makes financial sense, and sometimes my sellers will say, what are they thinking? Someone close to me about a year and a half ago needed a home and was trying to find something in the suburban Denver market for less than $400,000, and there was not a whole lot. They managed to squeak one out. I think you know who I'm talking about. And now that's gone up 34%. I know.
So now it's trying to find something that's below $500,000 as the entry point.
Right, and who would have thought that $500,000 would be a starter home? But that truly is what it is in the Denver metro area. And we have several counties in the Denver metro area, but it really is. You have to pay over $500,000 for a starter home. Now then there's the condos and townhomes, and homes per single family homes are about 2/3, 69%, and then townhomes are about 31%. So not quite 2/3 and a third, but most people want to buy single family homes.
Well, I know you've seen a lot. You've seen ninja loans back in the no income, no job or assets, 120% valuation that they were, the Community Reinvestment Act, that they were having banks give on properties. Well, of course there was a bubble and it blew up in 2008. Things are high. Do you think they're toppy? Do you think there's an impending doom or bubble right now? I know you've talked about equity a little bit.
Yes, well, we all thought it was high, and then we had the shutdown, and we thought, oh, it's going to tank the market, but it did just the opposite. It it actually, the last 2 years have been the highest sales in the last 10 years.
Any clues? Do you think it's people just wanting to get out of apartments and get single families? Or?
Well, and there's a couple of things. I think a lot of people can work from home, so they're like, if I'm going to be working from home, we need a bigger home. Or if I don't have to be in this city to work, I want to live where I want to live.
Well, the interesting thing with the businesses is the whole pandemic, or whatever you want to call it, it accelerated so many things. There had been a long, steady trend of more people having flex time, working from home or whatnot, and the companies were always so hesitant. It's like, oh, no, they're going to be sitting at home, you know, watching the football game or something. But productivity actually went up.
Yes.
And so, and no, not the drive time, satisfaction went up. Now, there's some people who just are not wired to work at home.
Right.
You know, you got to get up. You can't be sitting around in the fuzzy bunny slippers all day, right? You've got to, I recommend get up, dress for work like you're going to go to work, and then go into your place of work at home and work, do your job, you know?
Exactly. So it's back to the market. What is it going to do? I wish I knew. I wish I had a crystal ball a few years ago. I would have bought a few more rentals.
Oh my goodness, yeah.
But the millennials, there's a lot of millennials buying homes, and my husband and I look at all of that too, because we've got rentals and what is our exit strategy. But I think the market, it's dependent on the interest rates and on what's happening in the world. And
so how big of an impact do you think, what do you think a 1% hike in interest rates would do to the market?
Well, it's going to affect the payment. So instead of maybe buying a $600,000 house, someone might have to dial back and do maybe $550,000. I don't know the exact numbers.
So if they can't afford the payment, then they won't be able to bid it up quite as high, and it might offer a little relief on the pricing, you think?
It might, but we thought maybe that would happen last year or the year before, but it did not.
But whoever thought that high, we'd be referring to maybe 4.5%.
Right.
Right. When I remember my family, they built a home in 1963 in New Jersey, and the interest rate was 5.5%. And then they sold a home in 1982 or 83. You remember those days, the stagflation, Jimmy Carter's days?
It was terrible.
Oh, it was crazy. And I think it was 14% interest rate was at that point.
It was actually 16 to 18% because we bought our first home and we got first-time home buyer money. And instead of doing, you know, giving money for down payment, that's what they do now for first-time home buyers.
Right.
They lowered the interest rate, and so we got 13.75, and we thought we had just ripped off the bank. And that was in 1983, and our house just stayed stable.
And we thought we would never ever again see anything in this in the single digits, much less 5, 6, or 3, or 2.5.
Right, and our value of our home did not go anywhere for several years, and then we had a downturn in '89, but then it started going back up in the '90s.
Yep. Let's see. So what the sweet spot right now, it was interesting, you were showing me some graphs where the starter homes in the middle of the curve is around $500,000 right now. But it's interesting because it dropped off, then there was a blip then in the 1 to 2 million range.
Yes.
That was interesting. So how can you address that?
So I don't know, more people are willing to buy those $1 million to $2 million homes. And usually people have kind of this, I don't want to go over $1 million. It's kind of in their mindset. But just in the last year, the $1 million to $2 million has moved faster than the 8 to 9 and 9 to $1 million.
That's really interesting.
And then the over 2 million is not very much because there's a smaller pool of buyers who
Do you think people are getting overly confident that, well, if we're going to buy 8 or 9, we may as well get $1 million home?
Right.
You know?
Well, and plus the pool of buyers for that $1 million, because I had buyers looking at 800 to 900, and they're like, let's just bump it up to C. And they found so much more because not the pool of buyers for that $1 million is not as strong. There's not as many buyers, and so there again, supply and demand, and so that I think had to do a lot with that.
Well, one of the areas that we spend a lot of time in is helping people who've put together portfolios of properties, and a portfolio may be 1 extra home or 2, or 30 or 40. and they've been real estate owners. They've had to deal with the tenants and taxes and trash and toilets and all of that over the years, and they're tired of it. A lot of them are baby boomers. They want to cash out. And they want to sell without it being a big problem. They also don't want to get killed on taxes, and that's really where the planning impact of that 1031 exchange. That's really where that comes in, because we can show them how most of the time they've got some really good solutions for that they can cash in, they bring the cash register, get into passive ownership, and get a very good monthly mailbox income.
Yes.
If that's what they want, but it really needs to include. The planning needs to include what do they want to do with their money? What do they want to do with multi-generationally? So there's so much that goes into the planning, and I see what you're doing with the focus that you have on listings. It's almost like there's the listing strategy is every bit as important as how hard you work to get the house prepped or staged.
Right.
Can you talk a little bit about the listings?
Sure. And I want to talk a little bit about the 1031 exchange because there was that client that had 4 homes to sell. She wanted mailbox income, and you were able to take hers and do a 1031 exchange into the DST. So those 4 homes, I worked with her for several months, went to the homes, had to get approval from the tenants to take a few pictures so I could go home and evaluate what do we need to do to get that show ready. And she's like, well, can we just sell it with the tenants there? Another agent said we could, and we could get it sold right away in this market. I said, yes, you can sell it, but if you want to maximize your return, then we go in and we make sure it's all cleaned out. I hired cleaners, helped her get painters, got everything done, and I did light staging in a couple of the homes, which made a big difference.
Yeah.
And originally we were thinking sell around this price, but then we pushed it just a little bit, but then the buyers pushed it even more.
Yeah.
So she was able to really capitalize on that, and every single home, all 4 homes, sold for more than what
significantly
she
more.
Significantly more.
Yeah, I remember that case. She
Yes.
was pretty pleased with that. I know that in that case you've gone well above and beyond just being a realtor. It's almost like you've been a general contractor with a Rolodex of people that can come in, get something done efficiently. That's pretty unusual, I think. I think that is one area. It's a point of difference between you and a lot of your competition.
Right.
I know another client that we both know of who was so frustrated, had been in a home for 20 years, and it was a lot of deferred maintenance on that property.
Yes.
There were even talks of whether it should just be scraped because it was in a pretty ideal location.
Yes.
You came in and, I don't want to throw figures around, but you were actually able to sell that for probably 40% more than they thought it was worth by making some investments. Okay, but you acted as the go-to, the organizer, the general, if you will, not legally as a general contractor, but you help coordinate things.
Yes, and so we went through and said, I think if we put this much money into it, your return, it's more than 4-fold. I mean, it's way more than that.
Yeah.
And so
for the dollars that you spent of her money, she got about a 4-fold return.
Right, and she trusted me.
Yeah.
And I actually never met her until closing.
Yeah.
And we did it all virtually. I would send her ideas, and she trusted my judgment. And we turned that house in. I mean, this was a total gut job in the kitchen. All the kitchen cabinets came out, walls. It was a major thing, but it was a good creative opportunity for me. And since I've been
you enjoy it.
I enjoy it. And it was in December, January, which was a little bit slower, so I had the ability to do that. She made more money, I made more money. It was a win-win. So for listings, I do have a good group of people that I've worked with for years. Having been in the area for almost 40 years, those are contractors.
But there's
and
really
people I
strategy
trust.
to that.
Yes.
And it's knowing what money, if I put money in, I hear so often people say, well, to get the property, I know there was another one out in the mountains, and the owner felt like, well, before we sell it, I've got to do this. And you looked at it, and I don't know, 2/3 of the things he suggested really weren't going to benefit him.
No.
Yeah.
In fact, if we had got it on sooner, it would have sold faster.
Right.
But we still ultimately got it sold. But you have to weigh the time and the amount of money and the return, your return on your ROI, your return on investment. And really getting a home ready for sale. People say anything will sell right now. Well, yes, but if you want to maximize your equity, you want to go in. I do staging of my properties. I don't charge my clients for that. I have used a professional stager in the past, and it is expensive. So I have gathered my things. I have a place to store them, and so sometimes we just do little vignettes, little areas, just to accentuate the positive features of the home. Sometimes we just put little decorations in just to warm it up a little bit.
Well, that's kind of the Goldilocks approach. You don't want it so crammed with garbage and junk, and that's so many people have way too much stuff. Just empty it out. But you also don't want it to be a skeleton either, you know. So MJ, as far as listing, and there's a lot of strategy involved with the listings, that's really going to affect the pricing. We've seen properties recently. I know you and I talking shop. We saw one that was priced so far below the market, and that was unusual. But that almost just seems like generating too much noise and too much work, because they ended up probably having 3 times as many people walk through the place than they needed to.
Right.
So that's a big part of it. What are the other things? You talked about pricing. You talked about gap, appraisal gap. Chat about that a little bit in today's market.
Well, in today's market, sometimes they do price them just a little bit lower to generate more activity. And this particular one, he said he did the comparables, and that's what it came out to be. But I did the comparables. I would have listed a little higher. But right now, the strategy is to list it right where you're going to get activity.
Okay.
And if you list it too low, then you might get too much activity, too high, and nobody comes. And so you list it about where the market, maybe push it a little bit, but then buyers come in, and buyers right now are coming in and they're offering more, and then they put an appraisal gap in there, and some even put an escalation clause or an acceleration clause, say they'll go up to this price if there's another offer, and then they do limited inspection. So
do you end up with competing accelerator clauses ever?
Yes, and some agents will say no escalation or no acceleration clauses. Come in strong. Now, if we get multiple offers, then I'll go back to the top couple of offers and say bring us your highest and best, no escalation, because we want to know what are you willing to pay.
Right.
Also, the strategy is an appraiser might say, well, we agree with the original price and not the escalated price. So we want to have a contract that has a solid, this is what we're paying, and not a counter saying, oh, we want you to pay, this much more, and then the appraiser is a little confused.
So then having that offer that would include gap coverage, basically, hey, if we offer more than it appraises for, we'll make it good.
Right. So, but it's tough for those first-time home buyers or for the move up in that $500,000.
Yeah.
Because if they want to put 20% down, that's $100,000. If the appraisal comes in 10 and they go, let's pay $510,000. Well, they can pay a little bit more. With the mortgage can be a $10,000 more and not affect them that much per month. But if the appraisal comes in at $500,000 and they're paying $510,000, they have to come up with that $10,000. It's not just like it changes it to $102,000 they're putting down instead of $100,000.
So you've got a book, Selling Secrets You Can't Afford to Miss, and this, I think you could almost, if you have the time and you're willing to do it, I think as a seller you could use your selling secrets in your book to sell your own home.
Absolutely.
Right? You might also get into it and realize, oh my gosh, do I really want to sell my own home? There's a lot in this. Let's go ahead and have MJ list it for us.
Right.
This has been great. This is a great little tool.
Right. It's a great tool, and I did think about people who want to sell their own homes, and I actually gave it to one of my former clients who's moving, and he's like, I might try to sell it on my own. I said, then I'm going to give you this because it would really help you.
Sure, yeah.
And he may actually go in and decide, no, I don't want to do this.
Yeah.
And I told him a few of the things that I would do, and he walked me through his home. And his home will sell no matter what.
Sure.
But will he get the most? Will it have enough market exposure if you do for sell by owner? Whereas if it goes in the MLS, you have a lot bigger pool. And you know, there's a lot of other little things in there that people can learn from.
Well, and it's not a difficult read. It's, you know, close to 100 pages. How can somebody get a copy of your book?
I actually have it available where they can download it. I have it on my email signature.
And what's your website?
Agent in Denver, www.agentindenver.com.
Agentindenver.com, okay.
And a lot of people, Denver, when you say, I'm moving to Denver, there's a lot of different areas. When someone asks me where I'm from, I say, I'm from Denver. But then I say, I'm actually south of Denver in a suburb. But then they know I'm in the Denver metro area. So I feel like Agent in Denver speaks to a lot of people.
I think that covers it pretty well.
And they can download an e-book, or I can actually send one out.
Sure. Well, kind of as we come to a close, is this a good time for a realtor? Somebody new to get into the business. You've been so generous with your time. I know I've seen you coach people. Where would somebody start?
Oh gosh, it's so hard to start anything. Any business takes time and energy and money, and that was something that I wasn't aware of. You know, you have to join this board and join NAR, which is National Association of Realtors, and then the MLS, and I've got the MLS in Colorado Springs. That's a totally different MLS.
Is that a totally different market down there?
That is a totally different market, but they're mirroring us a lot more now because people have been moving south, and that whole the inventory is very similar.
Well, another 20 years, it's just going to be straight from Fort Collins to Pueblo.
Right, and so a good time to come into real estate is when you've got the time to invest not only money and time, but invest in yourself and learn. And I remember my first year in the real estate business, gosh, I think I made $20,000, but over half of that was expenses. So really, I didn't even make $1,000 a month. I mean,
but you got an education.
But I got an education, and so that was well worth it. And then my second year was great, and it was at the end of my second year I got involved with a builder and was able to develop a lot of relationships there, and that was what just helped me.
That's the foundation, really.
Yes, as a foundation, but I think it's good to have a mentor, and that's the other thing with EXP. I can mentor people, and it's mutually beneficial because I've helped a lot of realtors, and then they go on to be my competition, or I've taught and trained them on certain things, and then it's like, oh man, I lost out on that listing.
But you've always been generous. You've had a giving heart. You've been a good teacher, and you've been interested in helping people out. So with this new model that we're in now, with its ESP?
EXP, like experts and experience. And
EXP.
Yes.
Okay. Are you limited about where you can work with somebody?
I can work with anyone all over the United States and actually globally. They're opening up countries.
Oh my goodness.
There's a lot of growth and a lot of excitement, and that's what's exciting because I don't like change, but change challenges me, and when you're challenged, you grow. And a lot of first-time realtors, I tell them, you work for free every day. Well, I even tell some of my clients, I work for free every day, but when I get paid very well. Because some people are like, oh, you realtors make so much. You put a sign in the yard and you make all this money. It's like, that's very true.
Yeah.
But I didn't make any money today. I did a lot of things that will help me make money. So you have to put the client first.
Well, you know the story about Pablo Picasso? He's, I'll indulge me, he's at a restaurant, and a lady comes up to him and says, oh my gosh, you're Pablo Picasso. Here's my napkin or my linen cloth here. You know, just draw anything and sign your name to it. I'll pay you whatever you want. I want to show my friends that I met you. And so he has this very characteristic, pen and ink dove that's his. And he just signs it and gives it to her and says, that'll be $40,000. And she says, $40,000? that took you 45 seconds. He says, madam, that's taking me 40 years.
Oh, I love that.
And it is so true.
Right.
It is so true. So you spend so much time making it look easy. And I think that's true for everybody. Most people, they feel that what they're good at is they dismiss it, they discount it. It's like, well, maybe doctors don't, I don't know. But
right.
There's so many of them people that will, oh, I'm so good at this. How often do you have somebody who performs for you with the piano or this wonderful voice or something, and you give them some praise and they're like, oh, that. Well, yeah, that was really something special.
Right.
But it's easy for them because it's what they do.
Well,
so
exactly, and it's what I love.
Yeah.
And you take care of people and the money comes.
Yeah.
I was sitting with a client just last week. We just put their home on Coming Soon, and I was explaining how the showings and his phone just started pinging.
Yeah.
And I said, it's like Christmas, isn't it?
Yeah. Yeah.
And then another one came in, I'm like, oh my gosh. And then we were talking about something else, and he said, I think you're more excited about this than we are.
Well, it's fun. It's
is.
like putting a electrical toy together as a little kid when you finally connect the battery and it starts moving.
Works.
The lights come on. It is. It's like Christmas. So.
Yes.
Well, I appreciate you being on today. If someone wants to get a copy of your book, Selling Secrets You Can't Afford to Miss, they can go to agentindenver.com. They can reach you there. And you've got all your contact info on there, I'm sure, as well.
Yes.
And you can help individuals out who are looking to sell a home. You can help investors who are looking to downsize, graduate from property ownership to real estate investor, being a mailbox income sort of thing. And you're happy to talk to people who are trying to figure out if they want to get into the industry.
Absolutely.
Okay.
Absolutely. I love what I do.
Yeah, MJ, thanks for coming on today.
All right. Thank you.
You bet.
Impact 1031 is a DBA of Ridgegate Financial, LLC. Not an offer to buy nor a solicitation to sell securities. All investing involves risk. Past performance is not indicative of future results. Speak to your finance and/or tax professional prior to invest. Securities offered through Emerson Equity LLC. Member FINRA SIPC. Only available in states where Emerson Equity LLC is registered. Emerson Equity LLC is not affiliated with any other entities identified in this communication. Investment advisory services offered through AE Wealth Management. Emerson Equity, Ridgegate Financial, and AE Wealth Management are not affiliated entities.